Broadcasting from the Investor Hour studios and all around the world, you're listening to the Stansberry Investor Hour. Tune in each Thursday on iTunes, Google Play, and everywhere you find podcasts for the latest episodes of the Stansberry Investor Hour. Sign up for the free show archive at investorhour.com. Here's your host, Dan Ferris.
Hello and welcome to the Stansberry Investor Hour. I'm Glenn Eunice, Director of Media here at Stansberry Research, and I'll be filling in for Dan Ferris, so to speak, this week. Though you will hear from Dan, I'm just doing the open. Dan's on assignment. We do have an excellent interview lined up with Dan and his friend, Rahul Saraogi. Rahul's the founder and managing director of Untapped Capital Advisors, which is an Indian-focused investment management group. They discuss Dan's most recent visit with Rahul in India, and the similarities between the Indian and U.S. economies, and what the future looks like for potential investors. We're going to hold off on the mailbag this week, but we still encourage to hear from you, so we have a boatload of feedback when Dan returns next week. A couple ways you can do it. Send us an email, feedback@investorhour.com. We'd love your thoughts, notes, guest requests, and also we set up a phone line so we can hear from you and you can tell us what's on your mind. Give us a call. Let us know your thoughts and feedback on our feedback line, 800-381-2357. Maybe we'll hear your voice on our show. Now it's time to hear Dan's voice and his conversation with Rahul Saraogi. That's coming up right now on the Stansberry Investor Hour.
So I need to talk to everyone seriously here for just a minute, because right now we're in this weird emotional market with a lot of fear and greed controlling what the average investor is doing with their money. That's why we're seeing a lot of money pouring into crazy investments like NFTs and meme stocks and penny cryptos. People see the market still near record highs and they're scared of getting left behind. They want to be part of all the hot money-making stories we're hearing right now. But really, for most people, unfortunately, it's a bunch of crap. You're probably going to lose everything chasing speculative gains like that. Just ask someone who bought AMC stock or a bunch of Dogecoin a few months ago. It's the exact opposite of how I approach investing. That's why I'd like for you to check out a new video I just posted online at extremevaluestock.com. In the video, I'm sharing details of a fantastic risk-averse value stock opportunity that my research is showing could return about 200% over the next 24 months. I'd love for you to check it all out by heading over to extremevaluestock.com. But please hurry, because the stock I'll be telling you about is getting close to exceeding my buy up to price recommendation. And once it does, I'll probably have to take the video offline. So one more time, to learn the details, head over to extremevaluestock.com today. That's extremevaluestock.com. Time once again for our interview. Today's guest is my friend Rahul Saraogi from India. Rahul is the founder and managing director of Untapped Capital Advisors, advisor to the Untapped Capital family of funds. His mission is to consistently identify the best 10 to 15 investment ideas from among the thousands of publicly traded Indian corporations. Rahul graduated from the Wharton School of the University of Pennsylvania with a degree in economics and is the author of Investing in India, a value investor's guide to the biggest untapped opportunity in the world, a definitive guide on navigating the Indian markets, published by John Wiley & Sons. Rahul, welcome back to the program. It's been a while.
Thank you, Dan. Yes, indeed.
And so, Rahul, I just want to jump in because you're my guy in India. And I've met a bunch of folks at conferences and so forth, folks that we both know. But when I really want to know what's going on, I have to talk to you. And I haven't even thought. I hate to admit it, I haven't even thought about India probably over a year. And all I know about India is to look at a chart of the India ETF. It's too far off my radar screen. I think it's too far off everybody's radar screen. I know you'd agree with that, wouldn't you?
Yeah, absolutely, Dan. It has indeed been a while since we've spoken, and it's been, what, 12 years since you were here in southern India in Chennai with me, and we were driving around and looking at stuff. It's
Yeah.
been a while.
Yep, it has. So is it at any given moment when I've talked to you, like sometimes you're like, well, the market's run up huge and I'm really cautious, or it's way down and I'm really aggressively bullish or something, but because it does seem to swing a lot. As I look, like my only benchmark is like the India ETFs, and as I look at them, they look like just about everything else post COVID, just kind of a 45-degree angle up and to the right. How does it feel to you?
Yeah, you're absolutely right, Dan. I think that, post the April-May 2020 period, almost all asset classes look the same, and the India ETF or the India benchmarks are no different. Having said that, I would like to believe that, India is a little bit fundamentally driven, although there is a lot of froth in the system everywhere. India had a pretty tough few years pre-COVID, and we can talk more about that. COVID really extended the pain that India had been experiencing. So I think, yes, the rebound has been a relief from the worst levels in India, but I think that it's just starting to get warmed up.
Nice. Yeah, it did. It did. Things sort of went sideways from maybe like 2016 or so, like through the COVID bottom in early 2020. I wonder if you could just, I know you talked with us way too long ago before, but if you could just sort of, for the benefit of the listeners, and frankly me, I have to admit, if you could just re-encapsulate what was going on in that sideways period, and then we can talk about, what the future looks like to you.
Yeah. I'm going to give you a little bit of a long-winded preamble / introduction to this whole thing, Dan. I wrote my book in 2014. It came out in 2014, and as you said in the intro, the title was "The Biggest Untapped Opportunity in the World," the way I saw it then. It's been 7 years, and as you mentioned, not too many people think of India a lot. And 7 years later, it still seems like the biggest untapped opportunity. So, in a capsule, that's been the India story over the last decade. When you were here and when we used to talk about India, one of the things that has always drawn me to the Indian markets, other than the fact that I'm Indian and of Indian heritage, but just dispassionately looking at it as an investor, is the basic fundamentals, right? The rule of law, the democratic government, individual property rights, which I think is becoming more and more relevant in the world today. And somehow all of those fundamentals did not translate into rewards for investors over the previous decade. So the sideways movement that you see in the Indian ETF and in the Indian markets through 2017, 18, 19, this was really the pain period when banks were writing off huge amounts of bad loans. Poor governance companies were collapsing, and the markets were just going through very testing times. Um, you know, Towards the start of 2020, and none of us saw COVID coming, it really felt like India was a wound up, coiled up spring, ready to just spring back, bounce back, and kind of take its place where it really should be. And then COVID happened. So where we are today, I think that India has stabilized. The economy is coming back. But I really feel like we're at the start of what is going to be a 3, 5, and maybe even longer period economic super cycle, where we're going to basically capture the upside of the sideways movement of the previous decade, if you may.
Oh, that's very cool. Yeah, this is like, it's classic value. there's lots of value being created. As you point out, the fundamentals of the economy are very sound. And then you get in during that sideways period, or even, during some of the lower periods during that. And then it's like classic value, but your money is doubled before you know it. So, Rahul, when you talk about the fundamentals and you talk about like rule of law and particularly private property rights, in the back of my mind, I'm thinking of the the comparisons with China, right? Every time I think about China, my mind goes to the differences between India and China. And I often wonder, like, why is everyone so crazy about China? I feel like the world should feel about India the way they feel about China. I almost don't get it. We sort of get it, right? But I almost don't get why the world doesn't feel the way about India that they do about China.
No, yeah, absolutely, Dan. It's funny. You should talk about China. So, I spend all of my time in India, and you're absolutely right. When anyone talks about India, the comparison with China becomes inevitable. And funnily, if you were to read any of my commentary over the last decade or a decade and a half, invariably I do end up making comparisons between India and China. So I've kind of become like a quasi-China commentator as well. So I'm going to indulge you here and share my thoughts there. Dan, I think China has done a brilliant job of marketing itself. Clearly it has done a few things really, really well. I mean, the physical infrastructure that it's built, the ability to produce goods in large quantities, and the productivity gains that have come from that, China has managed to do those things really well. But then again, it has done some things very poorly, like, just the amount of domestic leverage. It's close to something like $30 trillion. And, China's entire financial system, feels like one gigantic Ponzi scheme. What China has again done very well is successfully tap the US capital markets, tap US investors. It has managed to evade US requirements of having audits. Its companies report whatever they feel like reporting. I mean, very few people know if that's real or not real. India, on the other hand, I think is very different. There is an element of soundness associated with how businesses are run, how companies are run, independent audits, governance, disclosures, whatever have you. But India has done a very poor job of marketing itself. See, Dan, I think at the end of the day, one of the things that I've learned in my 2 decades of investing, in India and otherwise, is beyond a very short period of time, the investor experience is very, very important. So, we started talking about fundamentals, but the reality is that, if your mark-to-market values don't increase within a reasonable period of time, fundamentals be damned, right? I mean, what are you going to do with fundamentals? You can't write a check on fundamentals. You're right. And I think that's what they've done really well. I mean, you have hundreds of billions of dollars of ADRs and stocks listed, Chinese stocks listed, and you can participate in them. And they've done a brilliant job of marketing themselves. I think India has failed to do that.
That's well said. You know what, though? I think there's a specific point here, and tell me if you think this is right. I think there's been a lot of criticism of capitalism and free markets in the past couple of decades. And there's a big belief in big institutions and big government should, everybody thinks the government should be doing more. And in China, the government, it will do anything. It runs roughshod over its own people. It says, you millions of people are going to go live here now, and we're going to level all your homes and build a new city or something. And the government allocates massive amounts of capital, do they not, in China, versus India, where that simply does not occur. I remember riding up the highway with you in India, and I said, what are all those little white rows of stones? And they were people's land. They were people's property. And we went into a business park, and there was a guy, we had to stop the truck because there was a guy herding goats in front of us. And I said, what's this about? And he said, well, the guy probably owned the land, and the deal he made was he gets to, herd the goats around and feed them on the grass, and they get to build an office park here. And I like that a lot more than I like the government shoving people around the way they do in India. But the world likes it. The world likes to see massive amounts of capital allocated by a big government like India. They perceive India as this entrepreneurial, capitalistic government. No? What do you think? Am I crazy?
Yeah. No, absolutely. And the line that I like to use, and I might have shared this with you in the past, Dan, is, I don't know whether it's from Ben Graham or from Buffett, which is that, a long string of impressive numbers multiplied by a single zero always equals to zero. And, one of the things about these big government things is that they can deliver great experience to you as long as you're aligned in the direction that they are. But, you always carry the risk of that big zero. And, if you watched what's happened in the last couple of days, the government wakes up one fine day and says, hey, you can't have for-profit education in the country anymore. And lo and behold, you lose $1 trillion of market cap. So, when, you wouldn't be able to do that in the US. You have a court system. Somebody would go file a class action lawsuit, all kinds of things, right? And it's similar in India. So, if the government said, hey, we want to, build a new housing complex here, or, a housing area, and everybody here should leave, somebody would go to the Indian court system and get a stay on that, like they should be able to. But Dan, the real question is, and coming back to investing in India, what's the big so what, right? I mean, yes, like you said, everybody now is enamored by the Chinese model. We're almost willing to have big government, and people are starting to say, hey, if I can get a good experience, why not have big government? I'm sorry, I'm going to use another example here, Dan. It's like that bald guy from the Matrix movie. I don't know if you remember that, where, he's eating steak and he says, he says to that agent, I know this is not real, but I don't care. It feels great. Just put me back in the Matrix.
Right. That's right.
And it's kind of like that, right?
It is. Yep. That's a great analogy too. And I can't help pointing out too that, the news these days and the market action is China's cracking down. The market is suffering, right? I mean, it's happening before our very eyes.
Yeah, absolutely. Yeah. And, look, Dan, I think that, the way I look at it, it can go on for a while. It can go on for a long period of time. I mean, it's like in the stock market, right? Just because something is, and you and I are both value investors, just because something is overpriced or mispriced, or we don't like something, it's not necessary for us to go and short that thing. We can go and find something else that we like to be long. And, that's how I've built my investing career. So, one of the things that I kind of also learned is that, I can avoid being in China, but I don't have to call that top, and I don't have to say, hey, this is exaggerated and it's going to blow up tomorrow. That's not relevant for me. What's important is that where am I going to put my hard-earned money, and am I going to be exposed to that big zero when I invest my savings? That's what concerns me more. And that's what brings us to India. And that's what I find exciting about investing here.
All right, so we don't need to talk about China anymore. Let's just talk about India. My perception of India is still that it's almost like everybody thinks it's one country, but it's almost like it's it's many different countries in one. There are different languages. I guess lots of people speak English, and maybe that transcends my concern. But it seems to me like China is perceived as a monolithic economy. Everybody does what the government says, but India is more dynamic and there's more diversity in it. And that's a good thing, I would say.
Yeah, absolutely. I mean, China is 90% Han Chinese. And, if Chairman Xi continues on his path, it may be 100% Han Chinese not very far into the future, right? India, on the other hand, has a different language. The food, the language, everything changes every 50 kilometers. It's called a subcontinent. You're absolutely right. It's 1.4 billion people, 560 something dialects, 28 major recognized languages, all kinds of food. It's like a mosaic. It's a smorgasbord of colors, flavors. It's too intense, right? I mean, it's stimulus overload.
Yep, it is, and it's like a free trade zone though, because it is a country, and it's like what the European Union should aspire to almost. It's just very open and dynamic to me.
Yeah, and some of the reforms in recent times, especially with technology as a backbone, have unified that market all the more, Dan. So I mean, India has never been a more common single economy than it is now.
Yeah. No, did you once tell me that you thought, maybe this wasn't you, somebody told me that they thought India was a lot more like the United States, which has been a very successful economy, than China or Europe or any place else. I don't know if you were the one who told me that.
Yeah, we did have a conversation along those lines, Dan. And, let me tell you simple, just simple facts, right? Harvard's endowment in the 1930s or 1940s was $40 million. Yes, they have received some gifts along the way, but today that endowment is worth $40 billion. Sure, they've been underperforming recently. It's the eighth wonder of the world that Einstein said, right? It's compound interest, it's compounding. And, if the most important thing for accumulation of wealth and for growth of an economy is to have long periods of uninterrupted compounding. And that has been the great story of the United States, right? I mean, over the last 200 plus years, it has been a compounding machine, whereas, there have been revolutions, wars, all kinds of things in other parts of the world. And that is where this rule of law, property rights, and a democratic form of government come in, Dan. So, India has 5,000 years of, individual records of individual property ownership. You will be surprised to know that, India was a British colony. In 47, it became independent. So it's been less than 75 years. But there are property titles in existence today that are more than 150 years old, passed down generation to generation, and it is recognized. And that's
Great.
Very powerful, Dan.
Yes, extremely powerful. There's an economist named Hernando de Soto who has covered this in a couple of books. In fact, Rahul, it is what makes the formation of capital possible, does it not? I mean, this is extremely important.
Yes, it's 101, Dan. I mean, this is the bedrock of everything. If the state has the power to take away your property, then you don't have the ability to compound it. You cannot build a free market capitalistic system with a dominant, interfering, appropriating state. It's not possible.
Right. So everybody looks at China interfering with the internet and, these education companies, and they're like, geez, this sucks. The greatest business development of the last 20 years, and they're screwing with it. So, but I want to do something now, Rahul. We've kind of talked from, a high level. Let's just go at least one step down. And my stereotypic, impression of India is like the industries that are big are, generic pharmaceutical companies and call centers and maybe a few other things. But what's the reality?
Yeah, that's a great question, Dan. So again, I'm going to take you one or two steps back and then give you a flavor of what India's economy looks like. Um, so Dan, India embraced full-fledged free market open economics in 1991. That's kind of the opening up of India. That's when India liberalized. It was about 12 years behind China. China did it in 1979. India did it in 1991. Prior to 1991, India had a mixed form, socialist. It was a confused state of affairs. But since 1991, it's pursued, open growth, open economics. Yes, property rights stayed all through, but I'm saying the form of, planned versus private sector driven growth. Now, it's not been that long. It's been 30 years. So the various segments. So India is 1.4 billion people, 50% under the age of 30. So it's a very young country. But 65% of the population, Dan, is either directly or indirectly dependent on agriculture. And that has been one of the reasons why India has remained a relatively small and relatively poor country. And then you have manufacturing in the middle, and I'll talk about manufacturing, and you touched upon, generic pharmaceuticals and some of that. And then you have a very vibrant service sector, which kind of developed since the late 1990s, so in the last 20, 25 years, which is your BPOs, call centers, IT companies, and so on and so forth. Now, what happened, Dan, is that as India acceded to the World Trade Organization, in 1999, China also acceded to the World Trade Organization. And China had this 10-year head start over India, and plus it had state-directed capitalism, where it built this head start on manufacturing. And there was also some mercantilistic competition, which I think we're all realizing with all our supply chain disruptions today, that we probably overdosed on David Ricardo, and we probably need to bring some supply chains back home. But going back to the story, so India, unfortunately, not only did it not build a great manufacturing base, but the manufacturing base that it should have built by virtue of its own consumer market was also exported away to China. To say it another way, even the goods that Indian consumers buy started getting imported from China. Now, some of that has been, the government has been trying to correct that in the last 4 or 5 years. So what you had is, you had a dominant agricultural part of the economy, you had a small manufacturing in the middle, and then you had the services piece that everybody kind of knows India for, by virtue of its programmers and BPO and whatnot, right? And then to add on top of that, India underinvested in infrastructure, which is very important for a country to be competitive in manufacturing. You need you need large capacities of highways, ports, power, so on and so forth, to be able to be a low-cost manufacturer. Now, what has happened in the last 10 years, Dan, is that as India has grown, albeit less than China, India has developed a large consumer market. And with the disruptions that are happening in global supply chains and the problems that are being faced now in China, India is truly emerging as an alternative, manufacturing destination. So a combination of three things, and India is also getting its infrastructure act together. So when you combine a large domestic consumer market that has so far been serviced through imports, but will now be serviced through domestic manufacturing, belated but significant investment growth in infrastructure, and the desire for the world to kind of diversify away from being over-dependent on China, when you combine these three things, India's manufacturing is now on a massive expansion spree. So to summarize my answer, you know, agriculture will become a smaller part of the economy. There is value addition happening over there. Manufacturing is growing in India. Infrastructure is growing in India. Consumption is growing, and services remains the bellwether also. So it's really firing on multiple engines here now.
As one would expect from a dynamic, entrepreneurial capitalist economy. I almost feel it's funny. The temptation is to say, wow, so, it's almost investing in India is like getting into China early. But, we've covered the great differences, and it could wind up being much, much better. And like you said, you don't have that one. Actually, what you described, with the one big thing is that it's almost like a turkey. When you have the government in charge of everything, you could wind up being a turkey. Life is good, you're getting fat, and then, on Thanksgiving, your head gets chopped off. And I think that's what people are experiencing with China just a little bit of right now. So could we go, I wonder, I mean, I know you charge people money and you manage their money and you pick stocks for them. I wonder if you don't want to go one step deeper, hey, it's cool. But if you do, is there, a name or two that you could throw out to us?
Yeah, it's not because I do it professionally, Dan. I mean, that's not the reason why I wouldn't do it. I think that, talking about individual stocks can be hazardous. So I would kind of shy away from that. But having said that, I do want to leave a flavor of where I see the opportunities to invest in India today. Would that be a good thing?
Absolutely, man. Bring it on. Yeah, sounds great.
Yeah. So Dan, I mean, it's not as if people have not been investing in India. I mean, for those investing in emerging markets, there are several ETFs that they invest through. Some of the larger companies do have ADRs, and then, for the really brave ones, they have managed to set up entities and set up onshore brokerage accounts and whatnot, and participate in the Indian markets. However, as you said in your intro, India has thousands of listed companies, and what I do professionally is, try and find undiscovered companies and then concentrate on the good ones that I like. So the proposition that I would like to leave out there for people listening is that there is a very big opportunity to invest in India beyond the largest 20, 30 names that the ETFs and that the benchmarks represent. And you kind of have to peel the onion and, kick the tires and dig in a little bit deeper to find those names. And I truly believe that's where the opportunities are. So, one area that has attracted a lot of capital and that has done very well in the last 10 years is the financial sector in India, especially because it was so difficult to invest in the real economy. As I mentioned, it was very difficult to invest in manufacturing and really any on-ground businesses. What investors experienced over the last 10 years was that the fastest way to scale a balance sheet and scale a company was to invest in a leveraged lender. So private sector banks, non-bank lending companies, and basically all kinds of financial sector stocks, those attracted a lot of capital. And then the other two areas where people invested are chemical, generic pharmaceuticals and IT services. I believe that if we were to look over the next 5 or 10 years, that would change somewhat. So areas of the economy which are doing well and are likely to continue doing well are consumption. The Indian consumer is at the tipping point in terms of purchasing power. And, anything related to Indian consumption, I believe, is going to do very well. This interplayed with technology and, app-enabled or technology-enabled consumption, this is an area which is going to do extremely well in India over the next 5 or 10 years. So this is definitely an area of interest where one should keep looking. The other area which I think will do very well in India is manufacturing, as I mentioned. But India has certain specialties. So India is a very responsible country when it comes to its environmental and social compliance norms. And if you take the chemicals industry or the specialty chemicals industry, and many components that go into pharmaceuticals, like bulk chemicals, bulk drugs, active pharmaceutical ingredients, and that whole ecosystem, India has very, very strong capabilities in that space. And while the Europeans dominated that space, and all the majors are Western European and Scandinavian, the Chinese did come in and try to commoditize that industry. But I think there is a very big pushback with strong, compliances against pollution and environmental abuse that has been happening in China, and also intellectual property abuse. So India's intellectual property ethos, together with its environmental compliance, is making India a hotbed for global chemical manufacturing and anything to do with chemistry. So if just like Taiwan is the big daddy when it comes to semiconductors, I think over the next 10-15 years, India is going to emerge a major player in that chemicals space. So that's one area which is very exciting. When you stay with manufacturing, again, India has very strong engineering and engineering-related manufacturing capabilities, and that too has an intellectual property framework around it. Indian companies have been partnering with German, Scandinavian, American companies for the longest time. So for example, green is the new big bubble, if you may. India, unknown to a lot of people, is one of the world's biggest manufacturer of wind turbines, for example. And it's a huge manufacturing destination for that. So on the manufacturing side, when one looks within these specialized niches, so it was consumption, manufacturing, and then Dan, I think that Indian infrastructure is going to be a major opportunity for the world. With 1.4 billion people, whether it is power, roads, ports, airports, cities, urban housing, this is one area where you could say that India is basically starting off where China was 20-25 years ago. India will not be able to replicate what China did, because basically it won't be able to raise and erase its history to the ground. But there is sufficient upside here that a lot of capital is going to flow in, and massive amounts of economic activity is going to take place in that space. And finally, I think technology, healthcare. You mentioned English. India deeply intertwined with the technology leader of the world, the US. I think the two countries are natural allies. I see the India-US relationship not very differently from the Israel-US relationship, for example, although very different in size. And I think that Indian companies and Indian entrepreneurs and US companies and US entrepreneurs will collaborate on technology, innovation, biologics, and all of that. So that's a very broad spectrum, and there is a lot to do over the next decade, Dan.
Sounds good to me, man. It sounds good to me. How about, Rahul, we don't wait so long to have you back, because I feel like we spend too much time backtracking and retelling things. I want to be able to just, start off with where we are and where, where you think the future is going, rather than that. But yeah, it was great. It's great to talk to you always. You're one of the most informed, smart investors I've ever met in my life. Let me ask you something, Rahul. When I was in India many years ago, your firm was pretty small. I assume it's grown. I can't believe it hasn't grown a whole lot since then, considering how good I think you are anyway. I wonder, can you share with us how your AUM has grown, for example?
Yeah, Dan. So, yeah, I think if I remember correctly, you were here in 2009. I think we managed less than $10 million at that point in time. And although we're not large from the asset management industry point of view, we manage close to 600 million at this time. So
Awesome.
things have
Yeah.
changed. Yeah. So it's been an interesting time.
Congratulations, man.
Thank you. Thank
Yeah.
you for that, Dan.
That is so awesome. That's huge growth, and it's plenty of money. You know, it's plenty. The asset management industry is insane. But you know, I do have my final question though. I ask everybody every guest gets the same final question, and that is, if you could leave our listener with a single idea today or a single thought, what would it be?
The single thought that I would leave investors with is that no matter what the short-term experience, intrinsic value and fundamentals matter. And I mean, as Ben Graham has said, in the short term, the market is a voting machine. In the long term, it's a weighing machine. Yes, the short term and long term is all warped up right now. But, if you kind of stick with the weighing machine and stay close to intrinsic value, it's very hard to get hit by the big zero. That's the thought I would leave you with.
Excellent. As soon as you said intrinsic value and fundamentals matter, I threw my hands in the air in victory. I loved it. Thank you for that. It's one of our best final thoughts. That's awesome. All right, man. We're going to call you a lot sooner than we did this time. We're going to get you back here in 6 or 12 months at a maximum. Okay? We need to talk to you more.
Thank you, Dan. It's been good catching up with you again. Take care.
All right. Like I said, Rahul he's my guy in India. He's one of the smartest, just most capable, most well-informed investors I know. When I was over there, many years ago now, 2009, his knowledge of so many aspects of the economy really, really impressed me. Like, like I said, we're driving up the highway and he was telling me about, how they have land entitlement there. People own property and lots of people like to have money. In fact, they have a lot of money in land and gold. And he was saying, it's kind of frozen capital. It needs to become more dynamic. People need to use it. Every sort of business or industry that we visit, every business we visited, he would tell me so much about that industry before we got into the meeting. And so much, and he knew so much about each business. He obviously has done a ton of work on these individual companies in India. So I promise you, I am not going to wait so long. We're going to get Rahul back, and we're gonna keep India on our radar screen. I'm as bad as the rest of the world at this, and I need to be better. We need to be the people who aren't forgetting about places like India. All right. And right now, like he said, they fixed the economy, the market went sideways, and now is the time to see all of those gains and, all the fundamentals improve. And he said, next 3-5 years, however long, should be a really fantastic time. I want to share a quick story about a man named Ken Langone. The son of Italian immigrants, Langone describes himself as a dumb kid from Long Island that barely got out of high school and almost flunked out of college. Langone's dad was a plumber. His mom worked in a school cafeteria. But Langone lived the American dream. He went from $82 a week to one of the richest people in the world. Langone's most famous move was an early investment in Home Depot, which enabled him to become a co-founder of what is now the biggest business of its kind in the world, with 2,000 plus stores and 400,000 employees in North America. Because of Langone's Home Depot connection, he has unique insights into the current status of the U.S. economy, the labor shortages, supply chain issues, soaring prices, and increasing inflation. And that's why it was telling to see Ken Langone go public on CNBC recently with an alarming prediction. He also says the government is already creating major distortions and that the people they are trying to help are the ones who are going to get hurt the most. And my colleague, a former Goldman Sachs banker, Dr. David Eifrig, agrees. He says most Americans are completely unprepared for what's about to take place in our country. What exactly is going on and what has these successful and wealthy Americans so concerned? Go online to get the facts about this urgent warning by visiting www.loomingeconomywarning.com. That website again is www.loomingeconomywarning.com. That's another episode of the Stansberry Investor Hour, and I hope you enjoyed it as much as I did, and I really did. We provide a transcript for every episode. Just go to www.investorhour.com. Click on the episode you want, scroll all the way down and click on the word transcript and enjoy. If you like this episode, send someone else a link to the podcast so that we can continue to grow. Anybody you know who might enjoy the show, just tell them to check it out on their podcast app or at investorhour.com. And do me a favor, would you subscribe to the show on iTunes, Google Play, or wherever you listen to podcasts? And while you're there, help us grow with a rate and a review. Follow us on Facebook and Instagram. Our handle is @InvestorHour. Follow us on Twitter, where our handle is @investor_hour. If you have a guest you want me to interview, drop me a note, feedback@investorhour.com, or call the listener feedback line 800-381-2357. Tell us what's on your mind and hear your voice on the show. Till next week, I'm Dan Ferris. Thanks for listening.
Thank you for listening to this episode of the Stansberry Investor Hour. To access today's notes and receive notice of upcoming episodes, go to investorhour.com and enter your email. Have a question for Dan? Send him an email. feedback@investorhour.com. This broadcast is for entertainment purposes only and should not be considered personalized investment advice. Trading stocks and all other financial instruments involves risk. You should not make any investment decision based solely on what you hear. Stansberry Investor Hour is produced by Stansberry Research and is copyrighted by the Stansberry Radio Network.